Good morning. Assalamu alaikum. On the behalf of the management, I would like to welcome you all for the analyst and the investor presentation of Al Madina Insurance Company for the financial year ending 31st December 2023. Let me start with the introduction first. My name is Hitesh Popat. I am the financial controller and the investor relation officer of the company. Joining with me in the today's session is our Deputy CEO, Mr. Shakib Mahmood, our Head of Operations, Mr. Anish Varghese, and our Board Secretary, Mr. Hilal Rajdi. We would like to thank CMA and MSX for providing us this opportunity where we can meet and interact and discuss with the investor and analyst community. We have a brief agenda for today, where we will be starting first with the company overview. We will be showcasing the financial past performance of the company, present the highlights of 2023, outlook, and in the end, followed by a Q&A session. With this, moving on to the first section, I will request our Deputy CEO, Mr. Shakib, to give you a company overview and the company's performance.
Thank you very much, Hitesh. Good morning to you all who have joined us. I don't see many people are there, but feel free to ask questions whenever you like or towards the end. Our vision of the company is to be the leading insurance company in Oman, and not only in Takaful space. We want to be leading in the entire pack of insurance companies, although in terms of our till last year, in the operating profit arena, we were the leading. In terms of the top line, we were among the top 5. The leadership is, for us, measured as a profitability for the stakeholder, satisfaction, which is a boast for us, for the customers, commitment to its employees, and we create harmony in our company. We have taken various steps like ladies who have small kids are allowed to leave early, and Ramadan timing for all employees, same. So that kind of harmony in the employees, and as a result, we retain a large number of employees over a long period of time. Our mission is to provide cost-effective insurance solutions and superior customer services, and that too in a manner that comply with the Sharia requirements completely 100%. And we have a very active Sharia board. Our values are innovation, social responsibility, transparency in everything we do, integrity, and teamwork. This is a journey map of Al Madina Takaful. The company was formed in 2006 as a conventional company, and at that time it was Al Madina Gulf Insurance Company. Then it was converted into full-fledged Takaful Insurance in 2014. Al Madina writes a mix of businesses, health, general, Takaful, all sorts of businesses. We are now a $111 million company, and one of the top insurance company in the Sultanate of Oman in terms of the gross contribution and operating profits. The company has a balanced and stable portfolio, which includes primarily the corporates, government businesses, and also personal, but largely we are into corporate sector. We are the first Takaful company to be established in Oman with a 17.5 million share capital, almost $45.5, as against a regulatory requirement of 10 million, although we are hearing that the regulators are likely to increase the share capital of the insurance companies somewhere around 20-25 million, but that hasn't happened. So we are still far ahead. We do adhere to the Sharia principle very strictly, a very robust Sharia board which looks into all our treaties, all our actions, all our investments. We have remained profitable for last 8 years continuously without a break and dividend paying. This is the 18th year of operation, and we are still evolving and growing. When I say 18th year of operation, this includes the conventional part as well as the Takaful together. This is a snapshot of our GWC, gross written contribution. In the common parley, you call it gross written premium also for the conventional. As you can see, we have been steadily growing from year to year, from 3.8 million to we reached 44.71 in 2022, where we took a pause and changed the strategy. And the reduction you see, about 2 million Real money, was our strategic decision to let certain loss-making accounts go elsewhere. So we prize ourselves in such a way that we didn't want to do that business, because top-line growth is not that difficult. If you are cheap in the market and you have a name for servicing, you get all kind of businesses. But we purposefully rejected certain businesses, and you will see the result, because our focus was bottom line, not top line. Even after losing 2 million of business in the top line, we were better profitable than last year. And you will see in the coming slides. Well, we are, as you all know, we are in the business of risk taking. All insurance companies are, and you accept the risk, you mitigate the risk, you transfer the risk. And by doing that, we foster harmony for all stakeholders. When I say foster harmony, meaning between the shareholders and the policyholders. The policyholder account should also be benefited by that. Unlike some where people give all the losses to the policyholder account and transfer everything to the shareholder account, and some of the analysts look into only the shareholders' profitability and decide about the pricing, etc. Although I see it correcting recently, but we balance the two. We do not give one advantage and the other disadvantage. Our both accounts are very well balanced. We are engaged in the general and family takaful activities and invest by adopting a wakala and mudarba model, which are aligned with the Islamic Sharia principle. We are one of the largest energy, power, and corporate insurers in the market. We have built customer loyalty through exceptional service to them, and we see retention of the customers. We see customers who go away from us, they come back for the service, even at a slightly higher price. So that talks a lot about it. There was an international brokerage and reinsurance house which recently did a survey. For last 2 years, we are on all parameters are on the top, i.e. we are in terms of servicing the customers, settling the claims, everything. We are way ahead of the industry. They rated us #1. And I can take the name probably, is Marsh International, who did for the last 2 years. We are leading the takaful provider and partners with major Islamic banks in Oman, and hopefully we will now go conventional with conventional banks also, because our Sharia board has given us permission recently to work with the conventional as well. Although our competitor were working with the conventional for a long, long time, but our Sharia board was not allowing us to work with the conventional banks. But recently we also have got the clearance, so we will also go there. Wealth of experience in effectively managing diverse clientele across multiple industries. We have a very qualified team of underwriters who have hands-on experience, especially on the specialty business across Middle East, Asia, subcontinent, and Europe. And we have a very long-standing experience management. Everybody is 10 to 15 years in the company or 8 years in the company. I am 7 years in the company. Manish is almost 10. Hitesh is 12. So people tend to stay with us. And so we have collective experience of hundreds of years. Efficient claim servicing with international best practices. Nobody is complaining about our complaint ratio is very, very low about our claim settlement, etc. We do actuarial validation to, this is how we are minimizing our risk, and that's why it's under the risk management slide. Our actuarial validation is done for all our reserves in line with the best industry standards. And a testimony of that in last 6 years or 7 years, we have multiplied our reserves, may it be IBNR, UPR, or provision for bad debts, at least 3 to 4 times. I'm not talking about 3 to 4 times, meaning 300, 400%. So that is a testimony that we are very solid. We have a very good base of reserve sitting in there. and possibly ready for a jolt in a particular year. The next slide is about the gross contribution business mix. This shows you where we focus our energies more and where we probably have to do more. Technical lines are heavy because we are energy and power sector insurer. We have the bench of underwriting bench which can evaluate the risk there properly. So we are almost 60% technical. We are 19% motor last year. We have increased a little bit to 23%. Medical, we deliberately reduced because medical is one line where everybody bleeds. And unless there is some discipline comes into the market, medical is a very difficult line where you lose out money. You can, do business, do top line. Conventional can do that because they have better opportunities to deploy their premiums into investment. Sharia has to go Sharia compliant investment, where I was looking at one of the big four analysis. The yield for the Takaful industry is less than half as compared to the conventional. And that's, I'm not talking about only Oman, it's for the region. So it includes the Saudi Arabia, Bahrain, Qatar, UAE, etc., etc. Life is, or life should be family. I think we have to correct this life. Because in Sharia it calls family insurance. Conventional calls it life. We are very minuscule. We are only 6%. Last year was 7 percentage point because mostly life is a long tail business and it comes through the conventional banks. They were not focusing on that earlier for various reasons. Of course, profitability was one of them, and the Sharia was not allowing us. But this year we will, inshallah, focus on this to increase and be profitable there as well. Al-Madina is strongly committed to increase the country value, and this is embedded in our business model. As a result, we are exceeding the legally mandated Omanization during 2020-23. 75%, I think we are almost 78. We do recruit and train Omani nationals. We have started a new initiative called BINA, where we take new Omani graduates, train them with us for some time, and then if they are good, we absorb them or let them go to the market to do various kind of things. Business retention in Oman, providing ICB through CSR activities. More than 85% of our investments are done in Oman only, and we do not go outside to invest, although there are restrictions from CMA, but we are below those percentages. Now, if you look at the company's past performance as a snapshot, I don't have to even say anything on this slide because the Manhattans, the buildings show that they are getting higher and higher and higher. But I draw attention to the guys listening to me. If you see from 22, 44.7 million gross written contribution came down by 2 million to 42.747. But if you go to the right-hand side, you see the underwriting surplus has increased from 6.7 to 6.9, almost 7 million. Even though we reduce the top line, we increase the underwriting surplus. So that's how the strategy was, and it worked very well for us. Investment income also, if you see, we continuously find avenues there we can make Sharia compliant income for the shareholders and the policy holders, and it's continuously increasing from 2017 to 2023. Profit before tax also, if you see, 17 was only 681. Now we are sitting at 1.7 million. Only 1 year, 2020, was a year where COVID was there, and there were hardly any claims on motor and medical because people were not getting onto the roads, not going to the hospitals. So that was an exceptional year where the profit was higher, but we're slowly approaching there. The most important, I think, for the investors and even the analysts is to look at how we are returning the yield and dividends to our shareholders. If you see from last 9 years, we are paying dividends. There was only one gap in 15, but for 8 years continuously dividends being paid, and dividend ranges from say 4% to 10%. If you take an average, is over the period is 6.4 probably. So it's a quite healthy dividend payout. So far, the company has paid out 10 million as dividends in last 8 years, 9 years. The total payout is almost 57.5%, which has been given back to the shareholders. A point to note here, which is not there on this slide, is that the company is multiplied its reserves, so that's also sitting in the balance sheet. The company book value of the share is 125 paisa, so the 100 paisa has become 125, so 25 paisa value creation is there. Plus you get this about 60% in dividends. So what happens, you are left with a very small value which you are doing business with. That's what the shareholders should look at it. And I'm very proud to say that my company's yield is one of the best in Oman. As you analysts would see, if Bank Muscat, if I can take the name and it's in public domain, paying 15% dividend this year, 15 or 15.5, their share price is 290. If you calculate on this, the yield will come down to maybe 5 point something. And our share is trading at 89, 85, 84 paisa, and we are paying consistently for last 4 years, if you see 7, 7, 7.5, 10, and the share price is not changing because maybe liquidity is not there, maybe people do not understand the Takaful model, whatever reason you guys know best, our yield would be almost 8%. So the yield on your investment of every real which you invest into Bank Muscat or you invest in this company is better than Bank Muscat. This is where I was talking about the balancing and harmony. Most of the Takaful companies, if you see in the region, are sitting on losses in the participant fund, because as you all know, there are two accounts in Takaful companies, and giving profits to the shareholders. Whereas we from 2017 onward, if you see the left-hand bar chart, is that we are profitable in both. The shareholders, which is the green one, the gray is the policyholder. So you see continuously we are making profit in both accounts, not giving one the losses and the other profit. That's not our style of functioning. We want both accounts to be profitable. And as a result, you see the company overall is being profitable. On the right-hand side, I'm very proud to say that the company had almost 6 million, 6.5 million negative accumulated. This is the balance sheet number. Accumulated losses in policyholder fund. In last 7 years, we devised a strategy and continue to reduce it. And if you see the numbers from 6.2 million in 2019 to 900, almost 1 million in 20, half a million in 2021, 146,000 negative in 2022. And this is the first year there are participant fund accumulated losses, not the current year profit. Current year we have been in profit from 2017 onward, is now a positive number of 8,000. And if you see companies in Oman or outside, most of the companies are sitting on huge accumulated losses. So it's a very proud moment for our company. My last slide, maybe you're not interested into it, but it shows what scope the company has in terms of increasing its business. And we are deliberately not going through the roof because we don't want to book losses and then say, oh, we extended our business, but hang on, it'll take 5 years to come back to profitability. That's why we're very slow and steady. We have a scope to grow. If you see the solvency margin requirement, we are always, there's a room there. Requirement is something, and we are far exceeding that. In 2023, if you see the gray one, is our solvency available. And the regulatory requirement for our size of business, our risk, because solvency is a calculation which is quite complicated. And CMA had come out last year or year before with a risk-driven solvency margin. It has lots of formulas, etc., put in there. So the lesser risk you carry and the better you manage your risk, you have better scope of solvency. So the company, if you see in 2018, we had a very little scope. 19 was even lesser. 20, we started to change our strategy, and now we have a lot of scope in terms of our solvency availability. So that's all in terms of what has been the past experience of the company. If there are questions, ask me now, or you can ask towards the question and answer session in the end. I'll request Hitesh to go and talk about the current year results. Hitesh.
Thank you, Mr. Shakib. I'll be presenting the key financial highlights. The company maintained another successful year of financial performance. The company achieved the gross contribution of 42.7 million, a 4% reduction as compared to previous year. This was mainly on account of change in strategy adopted by the company while peeling out the loss-making accounts. Despite the reduction in the gross contribution, there has been a 3% increase in the net earned contribution of the company, from 15.2 million to 15.6 million. The company took corrective measures to control the claims, as a result of which 1% reduction was achieved in net claims incurred, from 8.6 million in the previous year to 8.5 million. As a result of increase in net earned contribution and claim control, the underwriting surplus increased by 4%, from 6.7 million to 6.9 million. As a Takaful company, we have to report the surplus and the shareholders' profit separately. The participant fund reported a surplus of 154,000. The shareholder made a profit of 1.27 million as of 2023. The combined result of which the total profit after tax was 1.43 million, a 3% increase as compared to the previous year, which is a good improvement as compared to the previous year. Moving on to the next slide is the key performance indicators. The retention ratio of the company has increased from 34.4% to 40.5% as the company started retaining some of the line of businesses on their account. The loss ratio has come down from 63.1% to 62.8% on account of various claim control measures adopted by the company. The expense ratio has maintained at the same level of 34%. The combined ratio has come down from 97.2% to 97%, which is a healthy ratio for the insurance company. With regard to the investment composition, the company continues to adopt a prudent investment strategy where all its assets are diversified across various asset classes. The company ensures that all its investments are continuously monitored for Sharia compliance and are in line with the Sharia guidelines and principles. As a result of which, the investment income grew by 5%. The company reported the investment income of 1.43 million as compared to last year of 1.36 million. On an ongoing basis, the company reviews its investment book and tries to see the avenues on the Sharia space where the income can be increased. As a result of which, you can see a steady increase in the investment income of the company. Moving on to the next slide is the summary of the financial position. The company continues to maintain a strong financial position where the total assets grew to 123.2 million as of 2023. The total liabilities were only 101.3 million. The share capital of the company is 17.5 million, which is well above the minimum regulatory requirement of 10 million. The retained earning and the other legal reserve and the other reserves are 4.4 million. The total company's shareholder equity stands at 21.9 million. The net asset per share attributable to shareholders is 125 paisa as of 2023. With regard to the participant fund, the net position is surplus of 8,000 as against the deficit of 146,000 last year. This is a significant accomplishment not only in the Takaful industry in Oman but even on the regional basis. Moving on to the next slide for outlook, I would request our head of operation, Mr. Anish, to give a brief on the same.
Hi, good morning. Good morning, team. When we look at 2024, we have very positive outlook overall. When we consider the insurance market in Oman, we believe that it would show a stable growth in 2024. We have seen many mid-sized projects are floating on the market, and many projects have started, and many projects are awarded. Along with a stable oil price, it all will give a positive outlook and a stable growth in the market. We expect a growth of average 5% minimum in terms of GWP in the overall market. When it comes to the global market, particularly on the reinsurance segment, we expect that reinsurance market will continue to harden due to rate corrections mainly, and due to major catastrophic losses. Many reinsurers have withdrawn their capacity from the region. So it would harden further the reinsurance market. Then in Oman, still we are seeing a lot of opportunity to grow in the banking sector, particularly on the Islamic insurance segment for Islamic finance. So that will be a focused area for 2024.
And now conventional as well.
Yes.
Because we have got the permission from the Sharia board.
Yes. And when it comes to the market update on the new products, we expect that a unified health insurance policy will kick in at any point of time in 2024. That would give a lot of positive growth in the market, particularly in the medical insurance segment. Similarly, a lot of innovation and quality enhancement are going, and even in Al Madina, we are planning to strengthen our distribution channel. That again, it will give a balanced distribution channel strategy, and it would help us on our growth strategy as well. Similarly, Al Madina invested in our IT segment to improve our digitalization process. That would give a lot of easy for the customers to deal with us, and similarly, it will give a lot of operational improvement in the performance. For example, we have a lot of online platforms such as the garage module, claim registration module. So all the customers can do all the claim registration and all online wherever they are. When it comes to Al Madina strategy for 2024, our strategy will be to maintain our growth in a stable way and giving the focus on bottom line. So our focus on bottom line will ensure all the stakeholders are well compensated, and Al Madina is able to meet their expectation in 2024. Similarly, Al Madina is maintaining our market position in the top 5 insurers in Oman, and we continue to maintain our market position through disciplined underwriting. Then we would like to draw all of your attention that Al Madina won an award very recently, which is the best general Takaful provider in Oman by a UK-based agency, Global Banking and Finance Award. This also gives or shows our Al Madina strength in the market in terms of customer service and our ability to provide solution to our customers, and our commitment to all our stakeholders to deliver the result. So I would be more than happy to answer your questions. Otherwise, we'll move on to the next session.
I think before we move on there, Anish, because you see lots of awards in the market, you see the newspapers are full of awards, and everybody knows how awards are managed. We are not a company which wants to pay somebody some advertisement and get an award. We do not subscribe to that. We do not pay anything for any awards. To put perspective and some credibility to this award, they chose the best bank in Oman as Bank Muscat, the best financing company is Al Omania, and best conventional insurer as Dhofar Insurance. So you can see the level and kind of things this awarding agency is looking into, and this is anybody's guess anyway, who is the best in banking, who's the best in finance and Takaful. Having said that, we are not, a company which would want awards just like that, left, right, and center, and we do not appreciate awards where awards are purchased by giving advertisements. I open the question and answer session now. If you have any questions to me or to my team, please feel free to ask.
Hello.
So fine. Yep. Hello.
Can you hear me?
Yes, Vishen, we can hear you.
Hi, good morning, Hitesh and team Shakib. Thank you for the presentation. Congratulations on a good set of numbers. Yeah, just a couple of queries. You mentioned that you've seen an increase in the contribution of motor towards overall GWP from 19% to 23%, if I'm not mistaken. And that's where I see some of the high retention ratio coming from. Is that a strategy going forward as well, increasing allocation towards motor segment for 24 and beyond?
Yes.
Okay.
That's the strategy.
And good. And now that we've seen a full year in 2023 post-COVID, for 24 and beyond, do you think this is a stable combined ratio number, the 97-98% range?
I think we will strive to improve it.
Oh wow, that's fantastic news. Yeah, I mean, because I think you rightly
unless there is a Gonu, there is a Shaheen or something that you can't say, because insurance is a risk business. But otherwise, our model is such that we do not touch businesses which are highly risky. Doesn't matter the pricing. We do pricing right. We are not, and we believe that we can maintain and better our combined ratio.
Oh, that's fantastic to hear, because the company has been doing well for a sustained period of time. We've seen the numbers, we've seen the performance on both the operating side and the investment book, and most of the market went through a downturn on the operating side over the last couple of years. So that's pleasant to see. So it's very good to see. Beyond that, in terms of payout for dividend, where do you see the upside coming on that? Through higher profitability or sort of higher reserving? If you could just elaborate on that.
I think your voice dipped. So can you please repeat the question?
Okay, sorry, I'll repeat that once again. I said in terms of your dividend payout, you basically have a payout ratio which is linked with your reserving. So do we see some upside in that in the coming years?
We try to maintain a steady dividend payout, and if the profitability comes higher, we would like to, of course, pay better to the shareholders. But at the same time, we would like the company to be, solidified in terms of more reserving, so that on a rainy day, that does not give a jolt to the shareholders. That's our philosophy.
Makes sense. Next question would be with regards to the investment book. We saw interest rates move up rapidly last year. Now, one of the sectors that actually would benefit from that is the insurance sector because of your investment book. And if I look at your notes, it's clearly mentioned that your bank deposit rates, which range from 4.5 to 5.1% in 2022, went up from 4.5 to 5.9% in 23. What would be the average tenor? Because you mentioned these are bank deposits with maturity of more than 3 months. So what's the average tenor on the deposit book?
Yeah, because it varies from one deposit to another. There are large number of deposits depending upon our working capital requirements, etc. And this would range from 3 months to 2 years. I don't have a weighted average for you, but that's what it is.
Which is fine. I understand that. I mean, the rationale was to see sort of how long you've booked in a higher yielding asset, because I would imagine that these are the peak rates, and then sometime this year or going forward, you expect the rates to soften. So the opportunity was there to lock in a higher tenor, up till beginning of this year or last year. Just wanted to touch base on that.
Yeah, sure. See, all this depends on the US, as you know best, US Fed rate, etc., the economy elsewhere, the geopolitical situation in the region, the wars which are going around in the region. Future is uncertain for sure, but we have strategies in place where we would like to maintain our investment return also more or less similar.
Sure, sure. Noted. And you know, the next question will be on the investment book equity side. As a strategy, is it sort of an active play on the markets, or is it a buy and hold strategy? Now, I understand you have restrictions with regards to Sharia compliant stock, but what's the strategy there? Is it more of a long term in nature, or do you sort of look at active management on the equity book?
Well, we wanted a long-term nature, and we invested in certain shares thinking that we'll be long-term invested and they're good companies. They will give us good capital appreciation as well as dividends. But what happened, these companies went to the conventional banks, took the loans from them, and the Sharia board said, no, within 15 days you have to exit. So some of those investments we had to exit even at a loss, because we had no other options. So now we are looking into active management and short-term investment in profit bookings.
Okay. Yeah. That's it. Just general housekeeping questions. Wish you all the best. Thank you for the call, Shakib and team. Yep.
Great. Thank you very much.
I see Amit has raised his hand. Amit Fatado.
Yeah, hi, Tesh. Thank you. Thanks a lot. So my question is around the Takaful.
Amit, can you introduce yourself? Where are you or which company you're representing?
So yeah, I'm sorry for that. So I'm representing U Capital.
Okay.
Yeah.
Right.
So my question is around the reinsurance. So recently, Oman already secured Takaful license from CMA. And considering scenarios regarding the global reinsurance companies and the expenses that you bear with them, so do you have or are you planning to consider Oman Re for Takaful? And will it provide any benefit as a local reinsurer to you?
Well, I'll take it, and if there's need, I'll ask you. I think the reinsurance arrangements, as you would know, some of the arrangements are long-term, and you need very high capital in there. So you have your treaties with the biggies like Munich Re and Swiss Re, etc. So for sure, the local companies cannot match that kind of capacity, the expertise, and the capital. So that's the first thing. The second thing is there are certain facultative placement which you do on a case-by-case basis. And of course, if the Takaful capacity is available in the local market and it suits the company in terms of the terms for each risk and in terms of what commissions you get, we will definitely consider putting with them, but I think the capacities will be very, very limited because the capital size is small.
Okay, very well taken. Thanks a lot. And my second question is around the combined ratio. So as you also mentioned within your PPT that the Dhamani scheme is about to launch this year, and you are looking into the healthcare insurance sector to launch more products into it. But you also have reduced your revenue part when it comes to medical insurance. So, I mean, what should we expect? Like, if you are launching products in the medical insurance scheme, so will that also increase your combined ratio? Because we can see, medical insurance generally have higher net claims ratio. So, what do you see in this?
Yeah, sure. See, we are not introducing new products. Dhamani is compulsory mandatory medical insurance, which is implemented by the government of Sultanate of Oman. And they have selected certain companies which will be able to do it. And in Takaful space, we have already been selected. I don't know about the others. We will definitely do that kind of insurance looking at our combined ratio and profitability. We are not running after increasing businesses. We reduce because those accounts were bleeding historically, and there are competitors who are ready to take it at a cheaper price. We let them take have the fun with that. We will not compromise to grow top line at the cost of the bottom line. So we will have to devise our product in such a way that even if we sell a policy which is at a very low price, it only gives what you pay, you get kind of thing. And there is certain margin for the company. There's no point doing business where you fund it from your own pocket. In terms of the loss ratios, plus the premiums come after 6 months or 8 months, so you're financing for that period of time. That kind of model we do not believe in as a company. We will do it, but we will do it very carefully looking into it. We are developing new expertise in the company, new IT systems. We are looking into it, which talks to the money directly into hospitals, etc. But we will rest assured only do it if it is profitable to us, and
Okay.
as much as it's profitable to us.
Okay, understood. Thank you. Thanks a lot. That's it from my side.
Is there any other questions, or we can end the session then?
Well, thank you very much.
Okay.
If there are no questions.
Thank you. Thank you.